All right, ready to get into it. Today we're breaking down Walmart's Q3 2025 earnings call transcript.
Yeah, lots to unpack here.
There is. What jumps out at you right away?
Globally, they're seeing some really solid growth. Sales are up 6.1%,
Uh,
and even more impressive, their profits jumped by 9.8%.
yeah, that's a really healthy number.
Really is.
So let's dig into where that growth is coming from.
Yeah, let's break it down. Right off the bat, e-commerce is a big winner.
Cool.
Global e-commerce sales surged by 27%.
27. Wow.
Yeah, pretty impressive. And that's significant because it's way faster than the overall retail industry growth.
So they're taking market share, basically.
Exactly. They're strategically grabbing that online space.
Yeah. And it's not just e-commerce.
Right.
Their advertising revenue is also up.
Yeah.
By a lot? 28%?
Mm-hmm.
And membership income, like from Walmart Plus?
Oh, yeah, Walmart Plus.
That saw a 22% increase.
It's interesting. They're building this multifaceted thing.
Yeah.
Tapping into all these new revenue streams that are becoming super important.
Yeah, for sure.
In fact, these newer businesses, advertising, membership, and data analytics, they contributed to over half of Walmart's operating income improvement this quarter.
Okay, so that's a big deal. Now, the transcript also mentions some challenges this quarter.
Uh-huh.
A U.S. port strike
Yeah.
and 2 major hurricanes.
Right.
Those mess things up.
Well, the hurricanes actually bumped up sales a little,
Oh.
but they did hurt profits.
I see.
CFO John David Rainey, he actually said hurricane-related sales were approximately $270 million.
Okay.
But the profit impact of the storms was greater due to supply chain costs, inventory write-offs, and wage premiums.
So they sold more, but it cost them more to do it.
Yeah, that's it.
What about the port strike? How did that impact things?
It's a little harder to tell from just the transcript.
Okay.
They do say that the strike, along with some inventory adjustments, did have an impact on their general merchandise sales.
Mm-hmm. Now, for those of us who don't spend all day thinking about retail, what exactly is general merchandise at Walmart?
You're right. Sometimes we forget to explain these things.
Yeah.
General merchandise at Walmart is basically everything that's not grocery. So apparel, home goods, electronics, toys, all that.
Fun stuff.
Kind of, yeah. And it's a big part of their business, so how it does is really important.
Especially because it's generally more profitable than groceries.
Right. However, this quarter, general merchandise sales in the U.S. were only up in the low single digits.
Okay.
And here's the thing, those low single-digit gains, that was despite deflation of over 4% in general merchandise.
Wait, deflation. Doesn't that mean prices are going down?
It does, yeah.
Yeah.
So they had to sell a ton more stuff to get those tiny increases.
Wow. Okay. So what drove the growth, even with the deflation?
Well, home, hard lines, and toys were strong. And then there's the marketplace.
Right, the online marketplace.
Yeah, it's pulling in higher income shoppers and seeing good growth, particularly in things like apparel, toys, home, and healthy foods.
Interesting. So even though general merchandise wasn't amazing this quarter, there are definitely some bright spots. All right, well, let's talk about the bigger picture. What are the analysts saying? Are they on board with Walmart's growth story?
Well, they were asking some pretty tough questions during the call.
Oh, yeah.
One thing that kept coming up was sustainability of the growth, especially keeping those higher income shoppers they're attracting.
Yeah, is that a fluke or a real shift in their customers?
That's the million-dollar question. Kate McShane from Goldman Sachs, she asked directly about that.
What did they say?
Doug McMillon, the CEO, he acknowledged that the competitive set we focus on today is different and it's changing over time, probably at a more rapid rate than it used to.
Interesting.
He went on to say how important their value proposition is, low prices and convenience in attracting a wider range of customers.
Yeah, that makes sense, especially when times are tight. People want value.
Right, but with inflation, can they actually keep prices low enough to stay competitive?
Especially since they're investing so much in things like e-commerce and wages.
Yeah, how do they balance all that? That's exactly what Michael Lasser from UBS wanted to know.
Uh-huh.
CFO John David Rainey said, "We feel like we're striking the right balance between profit expansion and investment in the business."
So they think they can keep investing and still have good profits.
That's what they're saying, yeah.
Are the analysts buying it, though?
Well, Simeon Gutman from Morgan Stanley, he questioned if the fast growth in Q3 was a real turning point, if this level of performance can keep going.
Makes sense.
Doug McMillon's answer was interesting. He said, "To me, it feels like it's pretty consistent. I still feel like we're kind of running the same level of momentum in the same economy."
So he's saying it's not a fluke.
Right. It's part of a bigger trend.
But the analysts clearly want to know if they can keep up this pace.
Oh, yeah. They're definitely pushing back. And it's not just about growth. They're worried about costs, too. SG&A?
You mean like the costs of running the business?
Yeah,
Salaries and rent and stuff.
exactly. Those costs are going up, especially with e-commerce.
Makes sense.
So analysts are wondering if they can keep those costs under control while also investing.
Yeah, it's a tough balancing act.
It really is.
So we've got strong growth, cost concerns, a lot of analyst scrutiny.
Yeah.
What else was interesting in this earnings call?
Well, there were some good discussions about competition. Peter Benedict from Baird, he asked about the competitive response to Walmart's gains. How are other companies reacting?
Everyone wants a piece of that pie, right? What did Doug McMillon have to say about that?
He said that the competitive set we focus on today is different and it's changing over time, and that they have to be agile and adapt, always watching what their competitors are doing.
It sounds like they're not getting complacent.
Not at all. And that brings us to membership growth. Greg Melich from Evercore ISI, he wanted to know what's driving that for Walmart Plus.
Right, Walmart Plus A, that's their version of Amazon Prime.
Exactly. With free shipping, fuel discounts, all that.
What's driving the growth there?
John Furner, he's the CEO of Walmart US, he said it's the value proposition of Walmart Plus A, especially for people who want to save on delivery costs.
Yeah, that makes sense.
He emphasized that they have to get it right, though, he said. We need to be really clear on our offer. We need to pull the orders on time without substitutions, and we need to deliver to customers exactly what they're looking for.
So it's not enough to just have the perks. You have to actually deliver on them.
Right, and data is key to that. They have so much data on customer behavior.
Oh, yeah.
They're using it to personalize things, make their supply chain better, and target their ads more effectively.
So data is basically a secret weapon.
It really is. Okay, let's switch gears and talk about their guidance for the next quarter.
All right, what are they saying about Q4?
CFO John David Rainey, he was cautiously optimistic. He said, "We are raising our full-year guidance to reflect strong third-quarter results."
So they're feeling good about the year as a whole.
Yeah, but Q4 is a little more complicated.
It's the holiday quarter, right?
It is. They're projecting full-year sales growth of 4.8% to 5.1%.
Okay, which is good.
It is, but they also said that means a slowdown in growth for Q4 compared to Q3.
Really? Why is that?
A couple of things. First, the holiday calendar this year is shorter. There are fewer shopping days between Thanksgiving and Christmas.
Ah,
That
yeah.
could impact sales. And second, they're still investing a lot in e-commerce.
Right, which can impact short-term profits.
Exactly.
So some headwinds in Q4. It'll be interesting to see how they do.
Yeah, it's going to be a key quarter to watch. But before we wrap up, can we go back to those alternative revenue streams for a second?
Yeah, they seem pretty important.
They are, and there's a lot of room to grow there. Advertising, membership, data analytics, all strong. They even mentioned Walmart Data Ventures, which is growing at a double-digit pace.
So they're really betting on these new businesses for the future.
They are. It's like they're adding this whole new engine.
On top of the old one.
Yeah, exactly. It's really smart. It makes them less reliant on just traditional retail.
And sets them up for success, no matter what happens in the future.
Exactly. It's a smart strategy.
It is. All right, so we've covered a lot in this first part.
We have.
Strong financials, challenges they faced, what analysts are saying, their changing business model.
A lot to think about.
There is. Stay tuned for part 2, where we'll dig even deeper into some of these things, explore their e-commerce strategy, and look at how data is shaping everything.
So you can see how Walmart is really shifting, right? From this traditional retailer to something much more dynamic.
Yeah, for sure.
It's almost like a layered approach. You have core retail at the base, but then they're adding all these other things, e-commerce, advertising, memberships, data analytics.
It's a whole ecosystem.
Exactly, and that's what's letting them grab market share in e-commerce.
Right, that 27% growth we talked about.
It's not an accident. They're really prioritizing the customer experience, even if it means waiting a bit on profits.
Yeah, their CEO, Doug McMillon, actually said, if investments in delivery speed cause us to reach profitability a little later, that's fine too. We want to deliver faster.
That's a long-term play for sure.
It is, and it's resonating with people, especially those who want things fast and easy.
Right. Think about it. You're busy. You need something quick. Walmart's making it happen.
Whether it's through their app, delivery, or pickup.
Exactly. It's all about making things easier for the customer.
No friction.
Right. And that's where their investments in tech come in. They're always improving their app, expanding their delivery network, making pickup more convenient.
So that omni-channel strategy.
Yeah, where you can shop seamlessly however you want.
Online, in-store, whatever.
Exactly. And we can't forget about data, right?
Huge amounts of it.
They're using it to personalize the shopping experience, optimize their supply chain, even target their ads better.
That's powerful stuff.
Oh, yeah, it's like gold. They can anticipate trends, personalize recommendations, even predict demand.
Okay, so we've got the evolving business model, e-commerce, and the power of data.
Right.
But what about their actual stores?
Uh-huh.
Are those still relevant?
Absolutely. Their stores are still at the heart of things. They're a physical touch point for customers,
Yeah.
a place to see new products, pick up orders, make returns.
They said in the transcript that their store-fulfilled deliveries grew by almost 50%
Yeah.
and hit $2.5 billion in monthly sales.
Huge, right. It shows how they're using their stores to support e-commerce.
Smart.
But it's not just fulfillment. They're also remodeling stores, expanding grocery sections, making them more experiential.
Yeah, the Walmart near me just got redone. It's way nicer.
Right. They're making their stores into destinations.
Not just a place to buy stuff.
Exactly. And their new Sam's Club model is a good example.
Oh yeah, what's going on there?
Check out free tech, curated merchandise. It's a totally different vibe.
Interesting.
More about discovery and convenience.
Definitely different from the old warehouse club.
For sure. And of course, we can't forget price. Walmart is still all about low prices.
Yep, that's their thing.
Especially now with inflation, it's a huge draw for people.
They said general merchandise sales were up, even with 4% deflation.
That's impressive.
It is. They're walking a tightrope, trying to balance those low prices with healthy margins.
Yeah, it's a tough act, but they're managing.
And it's not just prices. They're also investing in employees.
Oh, yeah, wages, benefits.
Got to keep people happy,
Yeah,
right?
absolutely. Happy employees, happy customers.
It says. So they're doing well on a lot of fronts. Strong, financially forward-looking model, innovating, focusing on their people.
It's a good picture.
It is, but what are some of the things that could trip them up in the next few quarters?
Well, they mentioned the short holiday calendar, fewer shopping days.
Yeah, that could hurt sales.
It could, especially if they're not ready for that holiday rush.
And what if those supply chain issues come back?
Right. Like the port strikes.
That could mess up their holiday plans for sure.
Absolutely. And then there's inflation. They've kept prices low so far, but those rising costs for goods and labor, that could cut into their profits.
So they need to be careful.
Very strategic about how they manage that. And competition too, right?
It's fierce out there.
New players popping up all the time. They need to stay ahead of the game.
Keep innovating, keep adapting.
Exactly. They also face more scrutiny now,
About.
Their labor practices, their impact on communities.
Right. People care about that stuff more and more.
They do. They want companies to be responsible.
It's not just about profits anymore.
No, not at all. And we can't forget about the global economy, that uncertainty.
Recessions, trade wars, all that.
Right. Any of that could impact Walmart.
So a lot to juggle.
It is, but they seem to be handling it.
Yeah, they do. What stands out to you about how they're doing it?
I think their emphasis on being agile, adaptable.
Okay.
They're willing to experiment, learn, and change quickly.
That's important these days.
Essential, I'd say.
All right, so we've talked about their business model, e-commerce, data, their stores, prices, employees, and the challenges they face.
We've really gotten into it.
We have.
We've seen how they're trying to walk that line, attracting higher income shoppers while keeping prices low, expanding online while keeping their stores relevant, investing for the future but still having good profits now.
A lot to manage.
It is, but their performance this quarter shows they're doing it well.
It makes you think, they're so big.
Mm-hmm.
Are they setting the trends or just following everyone else?
That's a great question.
What is their success or even their struggles? Tell us about the rest of retail.
Well, Walmart's kind of like a bellwether for the whole industry.
Like a canary in the coal mine?
Yeah, something like that.
So what happens to them? It impacts everyone else.
Often, yeah. If they're doing well, it could mean good things for retail overall.
So if they're winning in this omni-channel world, does that mean everyone else is too?
It's a positive sign, for
Yeah.
sure. It shows that traditional retailers can adapt, even with e-commerce and all these new companies.
Right.
But not everyone will make it, that's for sure.
Yeah, there will be winners and losers.
Yeah, definitely. What separates them? I think adaptability is key.
Okay.
You got to be able to move fast, respond to what customers want.
Can't be afraid to change.
Right. Try new things, embrace technology, maybe even completely rethink how you do business.
Like how Walmart's not just adding e-commerce as an afterthought.
Exactly. They're really changing how they operate to create that seamless experience we talked about.
Online or in store.
Yeah. They're investing in their digital stuff, growing that marketplace, using data to make it personal.
That's what it takes these days.
It is,
Yeah.
but it's not just about tech.
Right, you have to give people what they actually want.
Absolutely. Consumers have so many choices now, you have to stand out.
So how does Walmart do that?
Well, they combine low prices, convenience, and a huge range of products and services.
So it's like a package deal.
Yeah, they're not just competing on one thing.
It almost feels like it's not just about selling stuff anymore.
Interesting point.
It's about the relationship with the customer, building trust, making them feel like part of something.
That's really insightful.
It's not just a transaction.
Right, it's more than that. That's where personalized experiences come in, loyalty programs, even a company's social responsibility.
Yeah, Walmart's doing some of that, but even they can improve, right?
Of course, they have to keep listening to their customers.
Figure out what's next.
And adjust, stay ahead of the game.
Right, and what about sustainability? That feels important.
Hugely important. People care about the environment, where their stuff comes from.
Walmart talked about some initiatives like renewable energy, less waste, ethical sourcing.
Yeah, but they got to keep pushing.
Set big goals, hold themselves accountable.
Exactly. Sustainability isn't going away.
That's how people think now.
Right. If you ignore that, you'll fall behind.
So retail is, I don't know, it's kind of a wild ride.
It is dynamic, competitive, always changing.
But for companies that can adapt, innovate, and really put the customer first, there's potential there.
Lots of it. Walmart's a good example. It shows change is possible.
Challenging how things are done can pay off.
Yeah, you can come out stronger.
It feels like a really interesting time for both shoppers and companies.
It is. Shoppers have more choices than ever.
And companies are pushing the boundaries.
Right. And as we've seen with Walmart, the ones who will win are the ones who focus on the customer.
Data-driven.
And doing business the right way.
Okay. Well, that wraps up our deep dive into Walmart's Q3 2025 earnings call.
Yeah, we covered a lot.
Their financials, their business model, what it all means for the future of retail.
Key takeaways for investors, analysts, really anyone who wants to understand what's happening.
But here's the big question. They're expecting a bit of a slowdown in Q4?
Right.
Can they avoid that? Or will the holidays be tougher than they think?
We'll have to see.
That's what we'll be looking at next quarter.
Definitely.
Until then, keep diving deep, stay curious, and remember, knowledge is power.